Matt Smith here with Family First Life, and I want to go over 5 different reasons why you're receiving chargebacks and you're putting your commissions in jeopardy. So it first starts with your value proposition in the house. One of the 2 ways that you can really drive up value is first having empathy, making sure that you understand what your clients are trying to achieve. So putting yourself in their shoes and really understanding what they want out of their life insurance needs. The second thing is, if there is no emotion in the sale and you're literally just giving price quotes, information, there is no value. So empathy allows you to understand their circumstances, and then storytelling inside of that is really what drives up the value, and that's where money exchanges hands. So anytime that you don't have a tremendous amount of value, those are the 2 areas that I would tell you to check right off the bat. The next thing that I see a lot of producers do is they use a qualification close in order to get the client to move into an application. Now, the key to the qualification close is, it's one thing to say, we're not sure if we can really get you qualified. Let's see if you can get it qualified. Then your final decisions will come down the road here once you receive your policy in 10 business days or so. And then you have a free look period where you can either keep it, change it, or send it back. So qualification close, if you're hanging your hat on that like every single time, that's where a tremendous amount of chargebacks come, because there's no ownership to it. So you've got to still make sure that the value is there. You got to still storytell. You've got to still make sure that they're going to keep that policy. So for those of you that are using qualification close, generally speaking, your policies are not going to stay on the books very long at all. The next thing that I would tell you is you have to eliminate the competition up front. If you're not asking your client if they have other appointments, or if they had prior appointments, what they liked about prior appointments, what they didn't like about prior appointments, what are they actually looking for? If you don't identify what they're looking for and then identify the problem to drive up the value, you're not aware that they're going to continually shop after you leave. So you might try to write an application and maybe they're just going down the road of a qualification close or whatever, but you don't know they're still shopping for that solution. And really, same basic scenarios, but if you don't drive in the emotion and the empathy, then you're really going to find them continually looking for other solutions. If you don't identify the problem, that is the key to sales. Identifying the problem, solve the problem with whatever product you're going to place, then that is where you're going to struggle and get a lot of chargebacks as well, because they're going to continue to shop. The next thing is you're going to have a lot of people that have buyer's remorse. That's a natural thing. It happens in this business. And the key to trying to eliminate buyer's remorse is when you are at the end of the sales process and you say, hey, John and Mary, I really appreciate that you took the time to protect your loved ones with this insurance policy. Can you see how this makes financial sense for you and how this builds a tremendous amount of value for your legacy to protect your family, etc.? If you don't, and this is after you've collected the money, after you do the application, if you don't go back and basically package this whole reason why they did the application, why this made financial sense, why this was the greatest solution for their financial position, if you don't do that, then buyer's remorse will seep in, because they might forget why they have a $50,000 policy, a $100,000 policy for a $400,000 loan, or whatever the situation may be. They may not understand why, so then buyer's remorse creeps in. So making sure that you tie it up in the end, even after they've done business with you, to make sure they're taking ownership is crucial for it as well. Now, the last thing is, when we see policies get charged back, it's usually because they feel like they can't afford it, right? They can't afford it. I can't afford it. Well, if you're not someone that's doing the top-down selling, where you're maybe offering top-down selling, but also try offering 3 different options. Try offering 2 different options. Try offering multiple options. The reason why I say that, it allows them to pick their budget versus you dictating what they can afford. Now, I'm a fan of through financial inventory to know what is affordable and what they can purchase, and I'd always recommend offering the most amount of coverage and the highest premium available to the household. However, I think you need to offer a couple other options to make sure that they can afford it and make sure that that policy stays on the book. So those are the 5 main reasons why your clients are charging back. I want to make sure you identify these to limit chargebacks. You're always going to have some chargebacks. That's normal in the industry. But if you're running much higher than a 20% clip, then you're doing something wrong in the house. So your job is to try to identify what area you need to improve in, and hopefully you can see that through this video and start to recognize where you can improve in and keep these policies on the books. You'll have a lot more happy clients, and you'll be happy in the end too. I hope the video helped. Thanks a lot.